Hello, everyone. Welcome to another edition of Tip Tuesday. As I mentioned last week, this would be a two-part series where we talk about paper trading. Last week, we spent a good bit of time actually walking through the process, how you might get it set up, what kind of brokers have paper trading accounts, how you would go about kind of just seeing if certain brokers do or do not have that capability. But this morning, we're going to spend a majority of our time not necessarily going through the process, but more so just talking about why this would be important. So, as we consider why paper trading, let's go ahead and lay out a big picture. Okay, so long term, big picture. What are you really wanting to accomplish with your personal trading? Most people are going to say, well, I want my account to grow. I would like to make a lot of money. Okay, cool. That's good. I mean, great. That's fantastic. That's ideally something that would happen for sure. But if you're starting out or you're trading and you're in a time right now where we are in the market where we're looking for patterns that are predictable, repeatable, reliable within the market itself, but also individual stocks. And then we get to days like yesterday, days like today, where the market really isn't doing what you would normally expect it to do. So, in a normal pattern, it wouldn't necessarily look like it does today. So, how do we kind of navigate through that, particularly if I'm a newer student or somebody that's struggling in my trading right now? One of the things that we would really suggest as a powerful option is to go out here and paper trade. And I would say paper trading is really essential for any new strategy that you're trying to learn. So at Tradeway, we teach a bunch of different courses, but anytime you're learning a new strategy, I would always suggest that starting out paper trading is a powerful way to figure out whether or not you understand that strategy, to know whether or not you're pushing the buttons correctly, and then to understand that movement over time. So, anytime I was learning a new strategy, I would suggest that you go out there and say, all right, let me paper trade this strategy first. And then try to paper trade it, because here's the biggest issue with most people when it comes to paper trading is they don't trade it the same as they do real money. Now, they think they do, but then when they go back and they honestly assess, what am I doing? How is this really working? They really don't trade it the same way, because there is something different about real money versus what we know is kind of fake money. It's just not really the same. I know for me, sometimes, like, I got into two trades last week, and there was a couple of days where I forgot about them. Well, thankfully they were working, they were doing really well, so I was able to exit them on Friday, and I was like, oh, cool, there we go. That worked out really well. I wish I'd have bought more contracts. Um, but I have a tendency to not treat paper trading the same way. Now, I would suggest that if you are doing it for real, that you do that. So if you would say, all right, I would only trade one contract, then in your paper trading account, where you can go in there and set the amount, make it whatever you want, make it more realistic. So if you know your account is starting out with like $2,000, then have your paper trading account start out with $2,000. It doesn't make a lot of sense to go out there and say, well, I'm going to put 2,000 in my real account, but let me put 200,000 in my paper trading and just see how that goes. Let's see what that would look like. One of the biggest goals from paper trading ought to be that you're trying to create habits that you would think are going to be sustainable once you start incorporating real money. So that's one of the biggest things I would say to you guys when it comes to paper trading, as far as a why, is to try to create the reality of, I'm trying to learn this strategy. I'm trying to make sure I'm doing it right, but I'm also trying to make sure I do it the same. Because the biggest issue, is what I'm going to call it, with paper trading, is that people simply don't treat it the same. So they either don't trade with the same amount of money, they don't trade with the same amount of contracts. They just don't make it the same. They don't enter the same types of trades. They maybe get in a lot of trades. Now, I will say this, right? It's okay to get in more trades than you normally would when you're paper trading, because again, the goal of paper trading is to really figure out strategies, and then to figure out how they're moving, how the prices are moving up or down, what that's based on, and then getting familiar with pushing the button. So obviously, yes, you can be in more trades than you might normally be in a real account, but I would really strongly encourage you to trade a similar amount of contracts and money to what you think you would be doing with your real account. Otherwise, you're not going to get a real assessment of what's happening inside your paper trading account. So I'm going to go ahead and bring up my paper trading account because I want to show you guys a couple of things and really just kind of help you assess why this would be important for me to incorporate paper trading anytime I'm trying to really learn a new strategy or to figure out how I'm really trading. So again, we'll go down here to our paper trading account. We'll open it up. We'll see a couple of things here. Basically, order ticket. So if we're going to go out here and we're going to place a trade, again, this is how we would do that. And they got stocks and ETF, they got options and multi-leg. So that's one way to do it. With charts by Tradeway, you can stage a trade, and I believe that just lets you kind of go back there and do something at a later date, and that's pretty cool too. There are some things that you can do, I think with this, but also I know with Thinkorswim, it's called Think Back, which is a really cool opportunity where you can actually go back in time, see the closing prices for options at the end of days. So you can actually go back and trade this strategy, see how the prices would have changed from one day to the next. And that's a pretty cool thing. And I think they have this, but you can only do like one at a time. So that's a little different. Positions, if you had any live positions, they would show up here. And then, gains. So you can see, my last two trades, I was able to do this, which again, I didn't, I almost forgotten that I was in these trades. So it was nice to to have them work out well and to see them go up well. Now, again, you have your journaling stuff, which again, I would also strongly encourage you and Charts by Tradeway to take advantage of this feature. So you can journal your trade, so you can go back and look at what you did and how you thought through that, and you can make notes in this, which would be really powerful for you to go in there and kind of think through what this looked like. So you can, do tags, but you can also go in here and take notes. I think taking notes is a really, really important aspect of paper trading. So whether your paper trading account has a notes section or not, a journaling section, go in and do that. It's going to be really important for you moving ahead to come back and look at what you did. What was my thought process? So when I entered that Walmart call, in this case, it was a bull call debit spread. What was my thought process? So I got in on 7:15. Now you're looking back going, well, would it have been better to get in on 7:16 or 7:17? What would that have looked like? Or that's when it expired. I guess I got in earlier than that, so it looks like it expired on. Yeah, so I got in on I think it was Monday, and then of course it expired on Friday. So this was a really short-term option. So what is the thought process there? And then just thinking through how all of that played out. So as the stock was moving down, what was I thinking? So go in there and kind of look at that. So, I mean, it'd be kind of cool. I mean, basically we can just do this real quick, just so we can kind of see and have multiple screens kind of working here. So just going back to that Walmart trade. So here we were on Monday, and we basically thought that Walmart would go, and I'll zoom in one more time because I don't know how big this is on your screen. I just thought Walmart would go from 125 up here to maybe, like the 50-day, like, 129 or something like that. So that was our thought process, that it would move from basically, 126 here up to maybe 129. But I went really, really conservative here. I think I ended up doing 127 by 128. Okay, which means I was expecting the stock to go up. Now, the very next day, hit a high of 127, but then it closed at 125. Now, guys, this would be really important here for you to go in and journal your thoughts. So I was in Walmart. It would look pretty good on Monday, and then on Tuesday it was looking really good, and then it dropped $2. Like, oh. So what are my feelings? What are my emotions? And so now we got to think through this process. Is it still above the 10 and 20 day? It is. Okay. Is it still at a good buy point? If I wasn't already in this trade, would I get in it now? I would. At least I think I would. Okay, so should I stay in this trade? Yes. So now you're thinking through the process. You're also going to be considering overall market tone. So obviously we'd have to bring that in consideration as well. But just kind of looking at this trade going, it's still above the 10 day, the 20 day. I still think it has potential to move up. I would hold on to this trade. Now the next day, you can see it opens even lower, but it does start to climb. It climbs up as high as 126. Now we wanted it to go much higher than that, but it didn't do that. It tailed off a little bit. Okay. So now we say, all right, so what I want to see the next day. Now, obviously, I was in a bullish trade. I needed Walmart to go up. Would it make sense to stay in this trade? And I say, looking at this and understanding what the S&P was doing, I say, yes, it absolutely makes sense to stay in this trade. One, because we thought the S&P would move up based on what was happening and its reluctance to drop last week. I'm like, well, it must be wanting to go up. So then I say, well, am I in a bullish trade? I am. Should I stay in a bullish trade when the market looks like it's ready to go up? Yes. All right. So I'm going to stay in. And then, of course, the next day comes. So we were in a 127 by 128. That's a bull call debit spread. You can see it hit a high of 128.32. It actually closed at 127.82. But that was a really good day for us. Okay, that was a really good day for us. And so those are things that you would want to think through and to say, well, how do I really navigate this? And because again, you say, well, this is 7/14 is Thursday. What did this stock do on Friday? Did it continue to go up on Friday? We'll look over here real quick and we'll find out that yes, indeed, Walmart did go up again on Friday. In fact, it went to a high of 130 and ended up closing at 129. So I remember 129 was our target initially. We really thought Walmart would get to 129. It just took, longer than we thought, but still got there in a week. In fact, it hit a high of 130. So when we go back to where we thought Walmart might go back here on Monday, it ended up doing it really well, right? So it ended up getting to the 50 day. In fact, it went past the 50 day, which we can see here. I just haven't updated that version over there yet. But this ended up being a really good trade. Now, does that mean that there weren't times when we really had to think through it and say, wow, what would I want to do on, this day or that day or now that it's below, so yes, there are things that I would have to think through. Those are the things that you want to journal here because that's what you're going to be trying to remember. Those are the things that are going to matter to you. And that's why you need to make sure that you are journaling those things so that when you get to that point, you can say, all right, here's why I'm doing what I'm doing. On Monday, I thought this, but I stayed in because of that. On Tuesday, put the date there. I did this, and here was my thought process. On Wednesday, I really didn't like what was happening, but it looked like the market was turning, so I decided to wait it out. Thursday, I got a big move up. That made me feel confident that I should see Friday here. And if you remember some of the prices, you can write those in too, that kind of thing. But it would be really good for you to go through and do that process, and that journaling tab allows you to do that. So again, you can go out here, you can practice multiple things, and you can go through and try new strategies. And I would say that if you're out there and you're trying to do a credit spread, a lot of people are really confused with what a credit spread is. Go practice it in a virtual account. See if you're putting in things the right way. See if it's moving the right way or not. And then how does your trade move up or down? And then what are your thoughts along the way? If you're doing a debit spread, oh, it's my first debit spread. Did I get the 3 Ds that we talked about? Did I get those correct? And if so, what did that look like? Did I do the right time period? Should I have gone shorter? You're going to be able to go in and talk about all these things. So that's a great opportunity to do that. So I'd really strongly encourage you guys to paper trade for a number of reasons. But the best thing is it allows you to actually trade but do it without either making real money, which is, a bummer. Obviously, if we made money in our paper trade, we're like, oh, I wish I'd have done it with real money. But again, we're not paper trading to just sit there and say, well, how much can I make in my paper trading account? We're paper trading to see whether or not I'm creating good trading habits. And if we're creating good trading habits and we're seeing positive growth in our virtual accounts, then we ought to be able to take those same basically theories, the same practices, and put them into real trades and ideally see similar results, particularly if we've been trying to really trade our paper trading account like we should be trading our real account. So that is our tip for today. I really do want you guys to take advantage of paper trading. I really think it's a great opportunity for you to really try new strategies, but do it without losing a lot of money and still put yourself in a position where you're actually learning how to do these things in a productive environment. So thank you for joining us today. We'll see you guys next week.